Good morning, everybody, and welcome to the second day of Industry City. Industry City is where we explore how our mobile ecosystem connects with specific verticals. Yesterday was manufacturing, tomorrow is mobility, and today is fintech. I'm Brian Gorman, I'm the fintech lead at the GSMA. So this is the FinTech Summit today. This is our second session in which we're going to explore the idea that payments is really driving digital transformation. And a big thanks to our sponsors, JP Morgan, and our supporting sponsor, Worldpay, for the help in shaping the session today. It's a really busy session, so I need to kind of move on. We've got two presentations from our sponsors and supporting sponsors. And then we've got a panel discussion featuring two of our fintech CEOs from the MENA region, as well as two of the major fintechs in the world with Stripe and Worldpay. So I need to be brief in my introduction this morning, so I'd now like to welcome on stage Shahrokh from JP Morgan to do our introduction presentation. Shahrokh.
Thank you very much, Brian. Thank you. So good morning, everyone. We are here to talk about payments. Now, maybe in a setting like this, 10 years ago, 15 years ago, payments would have been a boring topic. Maybe a fifth wheel of a car where corporate strategists would have not even thought about it in innovation. Of course, somebody's going to pay, and of course, it's going to work out well. I would say today, that has completely changed for a variety of reasons. One is the consumer experience is really demanding from everyone to have a frictionless payment experience, and this is not news to anyone. The other piece is technology, and technology embedded into payments. So we're talking about all these buzzwords like computing power, cloud, which is huge on your handheld devices, AI, machine learning, APIs, which plays a key role, and of course blockchain and distributed ledger. All these buzzwords have become a reality, and they have unlocked, I believe, the potential of payments to take it to the next level and make it strategic, take it away from being a simple transaction to making it part of the innovation strategy of the firm at CEO and CIO and CTO level. So there's many more things that payments can do today than we think. I'll just focus on two of them. And the first one is payments are messages. And I'm not talking about Swift messages, empty 101s and 200 messages, etc. I'm talking about messages being stories. Payments tell a story about how your market wants to buy, how it wants to pay, and therefore it's important to listen to those messages and to be able to do something with those messages. Let's take an example of a marketplace. And going back in time, a marketplace basically was a place where people got together and take 2-3 centuries before, in the Middle East, people got together and sold good things, and I am a player in that marketplace. I've just found the super spice somewhere in the Indian subcontinent, and this spice basically gives immortality. So I'm just saying, I'm going to make a killing out of this and make a lot of money. I'm going to take it to the marketplace and I'm going to sell it. So what happens is I go to the marketplace somewhere in the Arabian Peninsula. I set up my shop and my table and bring my spice and everything. And I notice that a bunch of people who are interested, they come by. They're very interested, but I'm not interested in the way they want to pay me. They want to pay me like copper, other metals, maybe silver, which is more interesting to me, or gold, but maybe also chickens and camels and barter and things like that I can't do anything with. Some of the older generations, they're willing to give up their houses to buy this spice. But, what am I going to do with houses, right? So that's first information that I have, and I learn about the importance of payments. Second information I have is that the people who are most interested in this spice are the ones who want to give me their houses, which is even more, I can resell the house potentially, but I have no time for that. I want to go back to finding more spice. So what happens is that this whole thing becomes a flop. I wrap up my table and say, okay, put the spices back into the earth, and that's the end of a great idea, just because I didn't listen to the payments story and I didn't know what to do with it. That same thing has happened in the 21st century as a lot of large corporates, some of them B2C or B2b, who, to respond to consumer demand, to buy things online, and also to adapt to COVID situations and all that, they've had to not only sell on a platform, but also sell other products, because consumers are not going to buy just shampoos from you and go somewhere else to buy hair dryers and maybe other beauty products. They want it in one location, so you would have to create a marketplace. And people have come up with these great ideas. Let's go direct to consumer. Let's create the next best thing, subscription models, buy now, pay later models, which are all great ideas. But what they've stumbled on is, again, the payments, because they're not used to dealing with consumers. They're used to receiving and paying, wires, high-value payments, ACH payments, direct debits. But now they have to deal with open banking, real-time payments, card payments. They have to deal with wallets. People want to pay WeChat wallet, PayPal, etc., or even cryptocurrencies. There was, at a certain point in time, we sort of forget, but 2 years ago, people wanted to buy cars using Bitcoin, right? And there were discussions around, how do we get that going? That's one challenge that companies have had to deal with. The other challenge is, once you move other parties' money around, so you collect money on behalf of the people who sell hair dryers and other beauty products, you have to give it to them. You need a license. You need to onboard them. You need a whole setup, which these companies are not or were not geared up for. So all these great ideas are still there, but they're not taking off as fast as these companies would want them to be going. And therefore, if you look at what they missed, is the whole story around payments. Listening to the message, being able to do something about it, that story. I even had a CEO of an automotive company call and ask about subscription model. They say, we have this great idea, we want to have a subscription model for cars, people go and pick it up in the streets, but can you help us with the payments piece? So that is one premise. The other premise, the second point I want to mention, is that payments are not only speaking volumes and you got to understand them, but they can actually be programmed. I'm talking about programmable money, and that leads to basically new business models and the potential for transformation. So what are we talking about? We are talking about currently, and this is reality, the ability to use distributed ledger, blockchain, to take commercial bank money and digitize that asset, and that's something that we've done under our Onyx program, to be able to move that money around the world 24/7 without cutoff times. And again, I'm not talking about stable coins, cryptocurrencies. I'm talking about just using blockchain to digitize an asset, a fiat currency, dollars, euros, pounds, any currency that is out there can be done. Open potentially to other banks, so it will become multi-bank. And this is something that a lot of the people that we speak to find game-changing strategically. And I'll give you 2 or 3 use cases for that. One reason it's game-changing concerns Treasury itself. And maybe corporate strategy, CEO, et cetera, are not interested in that, but I'll mention it anyways. The 1,000-year-old problem of getting forecasting right, and the holy grail of forecasting and missing forecasts and all that, could be resolved because you won't have any cutoff times anymore. You can move money around 24/7 around the world. And imagine if you add programmability to that. So if something happens, then do something. This is the way it's programmed. It's rather simple. So if my account goes into debit, then move money from another account and cover this account immediately. Or if I'm long on my net account, then invest it in this fund or this money market transaction. This obviously automates Treasury. makes it real time, and has an effect on working capital, making it much more efficient. Now, is this all reality and doable? Yes. Is it out there and very much used by everyone? Not yet, but there is the potential there, and we have one or two corporates going in that direction. The other use case is taking it beyond treasury and looking at your entire working capital, and especially your supply chain, the logistics part of your supply chain. Imagine you have one of your ships coming into a harbor carrying your goods. Today, it takes a long time for that ship to turn around and get the goods off and go through clearance and all that. Imagine there was a sensor on the ship that triggered, as soon as the ship came into the harbor, a payment for the harbor authorities, the port authorities, taxes, etc., and a series of other payments made automatically at certain points in time if certain things took place along the chain. This obviously accelerates the logistics part of your supply chain, and it has that potential, which then means that you can produce more, which means you can sell more. As we know, today there is a problem around supply chain and logistically making sure that the timelines are shorter. So that's another use case. There's a third use case, which again used to be very much of a buzzword, IoT, Internet of Things, machines talking to machines and all that. That also has become a reality. We have one corporate who is working with us to see how it could put the programmable money into its own offering. And this is a corporate that does industrial automation for other companies, so the whole industrial production line, machines talking to machines and helping machines, or smart buildings with the services that come with a smart building. By integrating programmable money into their offering, there is the ability to upsell, side sell, new services, or just make sure the machines replenish themselves automatically using, first of all, smart contracts, which is enabled by blockchain, and then micropayments on a real-time basis, which is automated based on certain things happening. And they believe that if they put this into their industrial offering, they could have an edge over the next player who doesn't have this. So these are some ideas of how the future could look like. The reason I'm mentioning all this, and I'll wrap up in a second, is that clearly payments not only speak volumes, but also do volumes. And the programmability is a great example of how that could fit into your models going for the future. Secondly, payments are no longer only a CFO treasury topic. They have become a strategic topic because business cases, new business models will depend on them, and how important, how they could be handled. So listening to the market, how people want to pay, and automating that process. And then thirdly, obviously, you all don't have to become experts in this field. You need to work with financial partners who are able to take those messages, translate those messages, enable the payments piece to be empowered into your machinery so that you can make more top line. And obviously, we, as a sponsor, I'm supposed to say that, we at JP Morgan, we believe we are that institution. We spend lots of money on R&D and technology. Our vision is to be the payments marketplace to the goods and services marketplace so that you don't have to worry about these things. But those are a few thoughts that I wanted to leave with you for today as the panel speaks about payments and how payments are now a strategic topic. So with that, I'll stop here and pass on to the panel. Thank you very much. Thank you.
Thanks very much. Thanks, Shahrokh, for a super start to the day. And JP Morgan will be back a little later today for a more in-depth discussion on another one of the areas of fintech. So I'd like to welcome on stage now Jeff DeLong from Worldpay to share his thoughts on global trends also.
Thank you, Brian. And thanks, everyone, for being here today. My name is Jeff DeLong. I'm the Director of Government, Utilities, and Telco Vertical Growth at Worldpay. I'm excited to be here today to discuss with you how payments can be an asset in your digital transformation. So to start, I'll take a moment to let you know who we are. Worldpay is the world's largest payment processor. Our solutions allow businesses to take, make, and manage payments seamlessly across channels, geographies, and industries. Over 1 million merchants today utilize Worldpay services to accept over 300 payment types among online, in-store, and mobile transactions. Worldpay alone processes nearly $50 trillion annually, nearly 50 billion transactions annually for over $2 trillion in 135 currencies across 146 countries. In the telco space, we've been serving customers for over 20 years, and today work with over half of the 50 largest mobile network operators globally, as well as a third of the top European satellite communications companies. So with that as the backdrop, I'll explain a few trends that we're seeing globally. And first and foremost is the exponential rise in the e-commerce space, and in particular mobile commerce. In recent years, every single region globally has seen double-digit annual growth in e-commerce. And mobile commerce now represents over half of all transaction value in the e-commerce space. This alone provides the foundation for so many new opportunities, and most of those opportunities are often based or heavily concentrated in certain regions before taking global root. Take, for example, Buy Now, Pay Later, or BNPL. This is the fastest growing payment method in North America, and in the last year alone, has more than doubled its share of annual transaction value. In South America, and in Brazil in particular, we're seeing a spike in the use of bank transfer rails as more and more government-sponsored instant payment systems come online. An example being Pix in Brazil. And Europe has really been the catalyst for open banking. Open banking provides the undercurrent and the foundation for so much innovation in the payment space and so many new opportunities. One in particular being embedded finance, which I'll touch on again in a minute here. The Middle East and Africa is decidedly mobile first. We've seen a rapid proliferation of the use of digital wallets, and in the next year, by 2025, mobile commerce will account for upwards of 70% of all e-commerce in the region. Similarly, in Asia, digital wallets are being driven by the use of super apps, such as Alipay or Gcash. These are apps which combine diverse functionality, including payments, into one convenient app. All of these trends are redefining the way people use, invest, and manage their money. They're creating a revolution in the fintech space known as embedded finance. But so much of this market is still untapped. Forbes projects that by the year 2030, the embedded finance space will reach a market cap of over $3.6 trillion. And our research shows that nearly half of non-financial firms have already allocated budget to build out their embedded finance capabilities in the next year alone. But what do we mean when we say embedded finance? Embedded finance is a concept which enables non-bank companies to provide financial services seamlessly integrated into their customers' experience. In short, embedded finance removes the barriers and friction that slow down the movement of money. It also allows businesses to provide financial services to their customers exactly at the point when they need it the most and where they need it the most. Take, for example, when you purchase a new phone. You can buy device insurance at the point of sale and bundle that into the payment when making that purchase. Another example of embedded finance in this space are telco companies which provide financial services through money remittance or digital payments to their customers using mobile money accounts. So in short, embedded finance is something that can enable your core business to grow, right? New opportunity for revenue growth within the core of your business. But it'll also open doors for you to new revenue streams, value-added services. And finally, it provides an opportunity for you to reduce operating expenses through increased efficiency. But you're probably thinking, what's most critical? There's a lot on that last slide. Embedded finance is a broad topic. What do I need to know most? So we embarked on a journey to answer this question through a campaign known as Payments 2025. What we did was combine a lot of research with numerous interviews with company executives, industry experts, policymakers, many others, to try and answer what will the future of payments look like and what are the most critical elements when building out an embedded finance experience. The first thing is that you must have an embedded purchasing experience at bill, pay, or checkout. This needs to be seamless and smooth. Take, for example, Uber. We all know how easy it is to order a ride through a few simple taps of an app. But consider now, if you had to go into the Uber app to order the ride, but then you were taken to another website or another app to complete the transaction, where you had to pull out your credit card, type in your credit card digits, wait for the transaction to process, and then finally get taken back into the app where you can track your ride, and then when you arrived at your destination, maybe fumble through your pocket for a couple dollars to tip the driver. Consider the impact that this would have on the customer experience and on conversion and repeat use. And as a merchant, you must have payment flexibility. Consumers will pay how they want, and you need to be able to accept multiple payment methods. This is particularly true with Generation Z and the younger generations. You need not only the ability to accept traditional credit, but also new and emerging payment methods such as buy now, pay later, digital wallets, right? Even cryptocurrency and other digital currencies. And finally, and possibly most importantly, this experience must be safe and secure. Fraud's one of the biggest pain points in many industries, and telco is certainly no exception. But this is a balancing act. If your defenses are too weak, you'll see an increase in fraud due to chargebacks and increased costs associated with losing those transactions. If your defenses are too strong, you'll see lost revenue from customer abandonment, and you'll create a poor customer experience when rejecting those transactions. You need proven solutions that rely on a bedrock of data to increase approval rates but minimize false positives. Consider this, for example. I'm based in the US, I live in Atlanta. How is it that I'm able to fly over to Barcelona, pull out my credit card this morning, tap it, transactions approved, I've never notified my credit card company, but also in Atlanta, when my card's been stolen, unbeknownst to me, we're able to reject a fraudulent transaction happening at a gas station less than 5 miles from my house, right? That's where AI and machine learning come in, and the data to determine what's a fraudulent transaction and what's not. So these are all key elements to keep in mind when considering your embedded finance and building out your own experiences. With that, I won't go through all of these individually, but I'd like to circle back and just emphasize how embedded finance is truly an experience which can allow you to grow your core revenue, grow your core business, but also open new doors for you. Add the value-added services, grow your business that way, and then also become more efficient, reduce operating expenses, We've seen numerous examples of each of these and how they play out in the real world in the telco industry. Again, I won't go through all of them individually, but you're welcome to join us in the networking session right after, or join me and my team at our booth in Hall 5 at any point this week, and we can go into more detail. We can discuss any and all of this with you. So in conclusion, once again, I just want to emphasize that payments today are being embedded almost invisibly into products and services everywhere. This is something that simultaneously enhances the customer experience, but also grows revenue for your business. Thank you, everyone. There we go.
Thanks very much, Jeff. Super presentation, and Jeff will be joining our panel. So I'd now like to welcome our panel onto the stage, and I'll just introduce them. So Sulabh Agarwal is the Accenture Managing Director for Payments, and he will moderate the panel for us. Helen McGrath is the head of EMEA Payments at Stripe. Khalifa AlShamsi, the CEO of in MENA, and also Nizar Al Twaijri, he's the CEO of STC Pay. So good luck, Sulabh, on the panel.
Thank you so much. What an exciting space to be in. What Shahrokh and Jeff spoke about payments. I mean, clearly, there's not a dull moment. We're going from programmable money to embedded finance to open banking to digital wallets to super apps to blockchain to cryptocurrency, and the list goes on. And I am delighted to be here with this panel with two of the largest payment companies and two of the largest telcos who have embarked on a payments journey to discuss about this very important topic of digital payments. I think you probably know Jeff enough from his presentation. Maybe Khalifa, Helen, and Nizar could say a few words about themselves.
So the last 10 years, Etisalat Group, which operates in 16 markets in the Middle East and Africa, have tasted the sweetener of growth beyond telecom. But it was incremental. Last year, February, we decided in a bold vision and a bold strategy to go from our telco focus to go into a tech space. And when we looked at the tech space, we wanted to doubling down on consumer and enterprise. In the consumer domain, and this is why when the company launched the vision strategy and they rebranded to E&, which is the Etisalat and a lot more type of focus area. My area is the E&, Life, which looks after consumer, all type of consumer digital space. And if we would have bet in one of the areas, FinTech would be the one, and this is one of the portfolio company under my remit, and this is something that the E&, Group will double down across the 16 market.
Thanks, Khalifa. Helen?
So hi, I'm Helen McGrath. I lead Stripe's EMEA payment method partnerships team. So we basically look after non-card payment methods at Stripe. Stripe is a global technology company. We basically provide tools for online businesses to run their businesses, including payments. And payments is what I've done for the last decade plus. So very excited to be here.
Thank you. And Nizar?
Well, hello everyone. Nizar Al Twaijri. I'm CEO of STC Pay. This is an EMI wallet solution that the Saudi telecoms company, STC, started up back in 2018. And the last 5 years, it has emerged as the unicorn fintech company in Saudi Arabia. We were able to corner about 30% of the bankable market in Saudi Arabia, became a leader in remittance, and one of the largest issuer of prepaid cards, and on a journey to become a digital bank, hopefully this year, inshallah.
Brilliant, brilliant. Thank you so much. So, I mean, we are at MWC, so any conversation has to be focused on the telecoms industry. Maybe Khalifa, you can kick us off here to talk about, do telcos really have a right to play and right to win in this payments market where there's so much activity going on?
So I've been in the industry for 29 years, so I think I know one thing or two about telecom industry. Brian mentioned that FinTech now is a theme of Mobile World Congress. And for those who are not coming from the telco industry and coming from the other industries, and here, question will be, do you have the right as a telecom operator to play? Do we have the right to win? And this is something that we reflected internally the last few years when we wanted to take the focus on what's so-called mobile financial services from a value-added type of a service into venturing it on a stand-alone business. Because again, now in the move from telco to technology company, you need to venture out new businesses. So we looked at internally, what assets do we and other telcos have that can leverage on to accelerate the growth in the fintech place? When you meet with a lot of fintech companies, you see them struggling on customer acquisition and customer acquisition cost. You see them that they want to build insights on customer. And when you look at telcos, you have the access to the consumer. So you have a lot cheaper customer acquisition costs comparing to a standalone fintech. You have a lot of rich data that allow you to have credit scoring for a lot of the products that you're going to be doing. Segmentation, focus on building the proposition for this. All this insight for a telco we're hitting, not being used, and only we've been using it for our own telecom related. But telecom revenue being stagnated and some market is declining. How do you use your assets and data that you have to strengthening this? Also, if you look at your point of sale, your channel access, your access to large and small enterprises, your ability to influence and lobby and work with government and authorities to shape the regulatory landscape. All of this is a lot of assets, I think, that gives all telcos of the world the right to play in this space and the right to win in this domain. And rather than being in a small hole, where's Brian, in this year, moving forward, we'll probably have the fintech session in the main stage.
No, absolutely. There is lots to leverage: the customers, consumers, the assets, the data, and so many more. I mean, Jeff, as a PSP, you clearly sit across all industries. How do you see telco's opportunity versus all the other industries at play here?
Yeah, that's a great question, and I have some interesting perspective into it because I just joined Worldpay about a year and a half ago. I was at Verizon for about 10 years beforehand, so I saw things from the telco side, and I really think that in the last couple years there's been somewhat of an awakening in the telco industry as it relates to payments, right? You know, while I was at Verizon, and I think telcos globally, you realize that growth is not going to be achieved through new connections, right? Everybody has a smartphone these days, and you know, continue to add connections where you can, but you need to find other avenues for growth opportunities. And I think within the telco space in particular, you know, there's a lot of opportunity, and they're very much primed to seize on that. And telcos are now looking at payments less so as just a cog in the wheel, a part of the process, but more a differentiator, right? And in a way to, as I touched on in my presentation, unlock new growth, unlock new opportunities, add value-added services that maybe 2, 3, 5 years ago you wouldn't have even imagined would be being part of the telco portfolio.
So telcos could use payments as a differentiator.
Yeah,
Brilliant.
absolutely.
Thank you. I mean, Nizar, you have already got 5 years of success in creating STC Pay to what it is. What's your take on the opportunity for the telecoms industry in this space?
Well, I think one of the major factors of success of STC Pay is STC, the dominant Saudi telecoms company in Saudi Arabia. And the vision to actually enter into a space and understand where the gap is in the market was key. As you know, Saudi Arabia has a large remittance business. And for STC Pay to come in the right time and fill that void and gap where there wasn't a lot of innovation and development, and the right time, right before COVID, allowed you know, the company to really corner the market. And also, the innovative nature of how STC Pay was designed is that it's close to the market. People who designed the products, the services, really understood how the Saudi market dynamics work, and positioned the wallet to cater to those daily needs and financial needs of the customer base. So these are, you know, critical factors of success for any type of payment company. Now, you have to be wary of your footprint and manage the profit aspect about it. You can go too heavy in investment and not complement your payment offering with anything that really has a bottom line impact, and you end up running on escalation of customers and running after that elusive active customer base while there's no major impact. So that's one of the successes that STC Pay was able to circumvent, is really focus on what really makes a bottom line.
Wow. So that's like clear focus on which customers to go after. You said remittances was the way how you started and grew, and clear focus on profits, which is not many fintechs think about first as they get into the whole payments journey, but phenomenal. Helen, from your perspective, I mean, you've seen all the various industries as well, and within them, telecoms. How do you see telecoms differentiating themselves against all the others in the market?
Yeah, it's a great question, and I think it sort of depends which industry you want to compare telcos to because of the big breadth of a typical telco offering. So I think drawing on some of the points you made, as a telco, you have the customers, you know them well, you actually have a relatively long-term relationship with them, so there's like a lot you can do to capitalize on that kind of customer acquisition that you've already got. I think one thing that telcos have done, which personally as a consumer I think is really cool and really great, is direct carrier billing. So I love being able to pay for my Netflix on my mobile phone bill. I think it's brilliant. Two sort of areas that I thought I might like helpfully call out where I think telcos could probably do more versus, for example, online retail are checkout experiences and the breadth of payment methods adopted. So online retailers have actually typically done like a really good job in recent years making their checkout experiences incredibly slick and very tailored to the person paying. So if I'm based in the Netherlands, the checkout knows and it surfaces ideal to me, which is the most prominent payment method in the Netherlands, because that's what I want to pay with. And I think that's an area that there could be kind of more investment. And then again, on breadth of payment methods adopted, we talked a lot already on this panel and in the presentations about really giving customers the payment methods they want to see. And that has like a massive impact on transactions and conversion. Like if you offer a customer a payment method that they know and that they use locally, that will increase your sales.
More payment methods,
Yeah.
slicker experience. I mean, clearly, the panel has articulated all the elements of the business case which exists for the telcos to actually look at payments as a significant opportunity. If we shift gears and get into more the what of the proposition, is it buy now, pay later? Is it embedded finance? Is it a super app eventually? Is it the programmable money? What is it that will, that's the starting point of the journey and where we are going? Maybe I'll start with Nizar. Of course, you've done extremely well with your digital wallet and the journey beyond. And you must have considered all these optionalities in terms of what all do you add in your stack and how you offer. Do you have a perspective on the propositions?
Well, we just mentioned, or some of the panelists mentioned, the different ways of payments and how payments are essential for growth. But our view is customers want to pay wherever, for whatever, with any channel, with any means necessary. So it's our role as payment companies, fintechs, potential digital banks, is to utilize any one of those depending on what our market says and what our constituents want. At the end of the day, utilizing this technology is no good without really understanding what your customer really wants. So, for example, when we talk about digital wallet, it was very successful for us. We understood what the market needed. Now, we have a view on super app. Not every super app is equal in any country, and not one size fits all. So the question is, how do you create an ecosystem for your customer base that really serves their daily needs and their requirements? Otherwise, super app is just a buzzword, as we've been hearing for many years. And a lot of people do not succeed in it because they're not applying it in the way their constituents need. For example, embedded finance. Embedded finance is truly beneficial only if you help your customer understand his finances. We've seen a lot of companies in the last decade or so who've come up with very smart propositions on controlling your finances, managing your payments, understanding and managing your checkbook. They've kind of risen and fell off the scope while we're in this digital age. So if a payment company or a digital bank does not preface this technology-driven solution with something that helps the customer understand if he's going far away from budget, is he close on budget, is he ruining his savings target for a certain item that he's planning to buy. So in my mind, all of these channels and all of these technologies are great, but if the company doesn't find the tool and the service that allows their customer to really understand what is the next step after this payment, then we're just all pushing payments and not helping customers make the right payments. And when it comes to buy now, pay later, for example, it's a great service. It's a great intuitive need. However, not everything is impulsive, and not every checkout stand you can make that split decision. Can I afford this in the next 4 or 6 installments or not? So if a company like ours does not develop assistance to the customer while he's at the checkout to really help him understand, can I really put this on a 6 installment or an 8? Or you know what, you should walk away. That's what really is the future of utilizing payment technology for financial services companies.
Absolutely. Focus on the customer, understand their needs, and create propositions accordingly. I mean, Khalifa, your perspective on moving from digital wallet to super app, do you agree with what Nizar is saying? Like that super app is probably not the end game for most organizations?
So I just want to drill on the point of portfolio of services also. If we go back to the early 90s, and you flash back and then back into the future, which is today, you've seen the terminology connectivity inclusion. There was no such thing back then. all the best predictions houses, they thought connectivity from the fixed line perspective, the early in mobile, is very limited. Look at us now. That's connectivity inclusion that has happened. So the mobile operator, which has evolved also over the time, have delivered that over the years. This is the power of this industry. So now when you look at it from the perspective of financial services, I believe that we have being able to aim for that and launch that, because we've done it already. Looking at the whole segments of the market, the proposition across bank and unbank. I always give an example. The UAE and Dubai is known for the lavish towers and luxury buildings. So if you are that blue-collar worker building that ocean-facing villa, can you own it? You probably say no. I cannot own it because that's very expensive. Now, with rich financial services in your hand with your digital wallet, you'll be able to buy fraction of that apartment or a building, and then you will get the premium out of appreciation of such properties, because you will be providing the solution for that, investment options, you will provide lending type of option, both. You will have services for the, let's say, blue-collar workers, which is today they don't have the rights for bank account, nobody will lend them, no debit card or credit card. Through the solution that we can back across all segments, that can be delivered. And for even the banked, a lot of us, shying away from investment. We cannot say the C word in investment these days. We're keeping it low. But even at the time of crypto, and people are talking about it, people fearing unknown company, not known to them, not local, not regulated in their environment. But if you stamp that company with your telco-backed fintech, you probably say, I trust that brand. So people do, and this is one of also the assets that we have. We are a trusted brand. We are a compliance-driven organization, so even regulator loves you because they know how it's done. So with that in mind, we'll be able to enrich our services. So taking it forward to the super app of everything under the sun, maybe not. I'm looking at it as a gradual approach. So yes, for financial services super app, that can be comprehensive for the various segments of the market.
Brilliant. So I mean, yeah, a super app maybe one full super app like Alipay may not be the answer for all geographies, right? They may be more moderated, maybe buying a home, a part of the home could be an answer for some, whereas a fashion destination could be an answer for others. Jeff, you spoke a lot about the whole embedded nature of payments and finance. Do you want to elaborate a bit more as to how telcos and others can really benefit from that move in the payments industry?
Yeah, happy to. So, I mean, embedded finance, embedded payments is the near-term future. It's really the present, right? And one of the things I talked about is how companies are really committing investment to this space right now. And when it comes to telco companies in particular, I want to kind of blend together a couple things that Nizar and Khalifa said, because I think there's some really key elements in there that give telco companies a distinct advantage. And telco companies already have that customer relationship, right? They already have customer trust. That goes a long way, especially when it's bringing financial services online, right? You have that brand recognition. Telco companies enable that connectivity, right? Obviously, you provide the link to the phone. For many people, your phone is now your bank. Telco companies they know the customer. They already have facilitated that process for their own services. You know more about the customer than most other companies trying to do the same thing, right? So there's certain elements that really give telco companies a distinct advantage and really put you guys in a unique position to bring these services online quicker, better, and cheaper in many ways than some of the other markets and other industries out there.
Yeah, I think one other point that was discussed in another panel was, location data is something which is unique to telcos.
Yep.
And combining location data payments could just change the whole consumer experience in a big way. Helen, how about you talking about alternate payment methods? What are the good characteristics of a payment method?
Great question. So there are a ton of payment methods out there now. There's been like a real explosion in the number of payment methods available, especially when you think globally. And that's to support like a big range of new business and finance needs, both for innovative new businesses, but also for existing businesses that are trying to navigate previously the pandemic and now the current macroeconomic conditions. So there are loads of payment methods, but they're not all created equal. So I think there are some common characteristics for all of the best payment methods. One is that they're seamless. So we've talked a lot about customer authentication, embedding that in embedded finance. Payment methods where it's easy for the customer to authenticate and trigger the payment convert better, so have higher transaction volumes. So to give you an example, we ran a delegated authentication program with a partner of ours where a customer didn't have to be redirected, and it increased transactions by upwards of 7%. No change to the business model or the product being sold, just more seamless, more payments. A second one is global. So there are not borders on the internet or when you're selling digitally in the same way as when you go into a store. So you need to be able to offer payment methods in the country of the person you're selling to, not necessarily where you're based. Cards is a brilliant example of a very global payment method. I can use my card anywhere I go. And then I think finally functionality. So people in this room, you will all understand the importance of being able to take subscription payments. Subscription functionality, recurring payment functionality is an area that a lot of bank transfer-based payment methods and open banking is lagging a bit on right now. So I think to kind of fully realize your potential as a payment method, you need to have the functionality to support a full range of subscription-type business models as well as the one-off payment.
So payments like the IoT payments and the CBDC and programmable payments will fit in neatly into your model of good payments with the right characteristics?
Some of them.
We've discussed the what in terms of the payments, but I think let's just in the final couple of minutes also explore the how. I mean, we know it is no secret, right? Like payments is a space or banking is a space where a lot of telcos have tried to go. And I mean, maybe I'll start with you, Khalifa. What are the what is the way to orchestrate a payments change in an organization that's already running at 100 miles an hour in a particular direction?
So definitely collaboration will be key in this space. Telco will come with their strength that give them the right to play, but you cannot be mastering all areas. So collaboration with different partners in terms of commercial partnership, in terms of expanding beyond core telco to acquisition in new spaces, and acquiring the right talent in the telcos will allow them to play further in that particular place. But we'll have to innovate. We have to add value to the industry that we enter. And that's by going beyond simple, basic payments services. As we explained by Jeff earlier and we discussed, there are a lot more services missing from a lot of the segments. And we have to penetrate more of the services. And we have to go beyond a single market, because that will allow you to be a credible player in this space.
Thank you. Maybe, Nizar, you can talk about the startup DNA, like for a large organization to try to replicate like a Stripe or a Worldpay, or a startup like a more fintech-y type organization with more forward-looking change. How would you see the organization changing its course to be able to work in that environment?
Well, as I said, we're in transition to become a digital bank this year. And maybe next year I'll probably have a better answer to this question once we've gone through the cycle. But I could say converting into or transforming into a digital bank, first thing to maintain that this DNA and this fintech DNA is, we shouldn't be hiring bankers, that's for sure. Said the banker who's sitting on the forum right now with 25 years experience. It's all about, first of all, culture. So we at STC Pay, from the board, through me and the executive management team, are all bought into the culture that this beautiful company that was created with this fintech sense and the startup mentality will continue. So there has to be a buy-in organizational level, and that has to continue on. Second is the right people. The structuring of the organization, converting into a digital bank or becoming a corporate, obviously you have to build governance and risk and compliance, etc. But in order to maintain that DNA, the positioning of the delivery team must be fintech savvy, must be digital, and must have amalgam of backgrounds. Retail, supply chain, logistics. These are the people that should be leading a fintech or a digital bank and have P&L responsibility. And third, obviously, is utilizing technology in the right way. You don't get bogged down with technology-driven. Technology enablement is key, but these delivery teams are the ones who have to own development and own the light sense of innovation. I think that's the key. We'll come back next year and tell you if it works or not.
Thank you. No, I think we've run out of time, but I mean, we can talk about this for like a full day or more. But hopefully you've got a sense of the business case, where to go in payments, as well as actually how to go about it. But thank you so much for the amazing panel and the audience. Give them a round of applause.